Jessica Reif-Ehrlich is Senior Media and Entertainment Analyst at BofA Securities. She joins us now, along with Martin CEO Mark Douglas. It's great to have you both in the house. And Mark, let me just start with you as kind of the advertising guru. I can blame you for everything that's going on. Is this because the ad dollars are, we know what's going on with the decline in cable households, the ad dollars are shifting to kind of streaming and so forth. Where do you see this all going in the next 5 years?
Yeah, I mean, pricing for advertising on streaming is definitely higher. I think the deal itself kind of feels like it was constructed by the finance team at Comcast rather than the business team. But, you know, that being said, Mark Lazarus, who's going to run SpinCo, he's like top-notch guys.
Great.
Amazing. And I think if he's involved and he's going to run it, there's strategic plans there that everyone doesn't yet know.
Let me dwell on that because I think you're absolutely right.
Yeah.
And while we might look at assets like a Paramount and a Warner Brothers Discovery and think, well, they have too much debt to be involved, in partnership with the new SpinCo, maybe there's something he sees that we don't, or maybe the industry is going to see so much more change in the next year or two that more opportunities will present themselves.
Yeah, I mean, I think why I say that, I can say it personally, when my company Mountain started working with NBC Universal, Mark was the first person to see the growth opportunities were going to come in the small, mid-sized businesses. And so I think he definitely sees that the cable businesses, that there's opportunity there. And instead of like something to leave behind, it's something to isolate and create more value from. But it definitely, I have to say, seems more like how do you value revenue driven as something to do than the entertainment consumer doesn't care, right? You have content, you have the consumer. They don't care how the signal gets to their home.
Totally.
Yeah, so to them, nothing has really changed.
Jessica, what do you make of the timing of all of this?
Well, I think the only surprise was that it was Comcast as the first one to announce this, as opposed to Warner Brothers Discovery or one of the other major traditional media companies. In our view, it seems pretty clear there will be a roll-up of cable networks, mostly for cost reasons. So Comcast is first out of the gate. There will be, low leverage, so they'll have a great balance sheet. And they talked about growing, and they kind of alluded to maybe acquisitions and returning capital. So our view is that this will be a roll-up vehicle for other cable networks. But what will happen as a result is you'll see corporate overhead disappear if they're rolled up, or divisional overhead. Advertising sales as well as affiliate sales be consolidated. And eventually, maybe down the road, private equity could come in. But it frees the rest of Comcast to do other things, whether it's, making, possibly with a new administration, maybe there's the potential for getting bigger in cable, NBCU, the potential for getting bigger in IP or other areas. But we do believe over the coming year or so, there will be a lot going on in M&A.
Yeah, no, it does seem like the opening move. Like, I can't wait for this book to be written because whatever's coming, it's going to be really fascinating. Right. So what do you make of them keeping NBC with Comcast, keeping Bravo? So if you were worried about either the optics of some of the channels under a Trump administration, or maybe just the reality of keeping some content along with the distribution, why keep a few of them in-house?
Well, the assets that they're keeping, NBC Network and Peacock, are really important assets. So viewers are going, obviously, from linear to streaming, and the NBC Network and Peacock will have really critical sports. They'll have the NFL, they'll have NBA, they have the Olympics, and that all stays at NBCU. So that's pretty important. They've also said, not this week, but when they released earnings, that they are open to merging their streaming platform. And that's another area we expect to see consolidation. To compete with Netflix or even the Disney bundle, the other entities really do need to be bigger. And Peacock has 36 million domestic subs,
right,
and it's not global, versus, let's say, Netflix is close to 300 million. Disney is almost 200 million with the bundle combined. So they really do need scale, and I think you'll see, this is why we do think that we'll see M&A in the coming year or so, particularly with this Republican sweep.